Boom. We are live. Welcome to Thursday Night Stock Charts Live. Welcome. I hope everybody is having an awesome trading week. We did. We're going to go over our trades in a moment for the week, which we closed out in the books. Profitable trades. Done deal. Market will not be open tomorrow. Good Friday. Happy Easter. Like the video. Leave a comment. Subscribe to the channel. Those who watch must be very impressed. And I remember that right off the top of my head, which I rarely ever do. You guys usually remind me to say that. What else do I need to go over? Oh, TrendSpider, 35% discount code below. Show promoter, automated technical analysis. Use the link below. Take advantage of that discount. What else do we have to talk about? Weekly charts. Where the hell is this market going? And why is it going to go there? We're going to talk about that. We're going to talk about the weekly charts. Why do we take a look at the weekly charts on a Thursday night with Friday closed? Why not? We need to start our analysis on Thursday nights to get an idea of how we are going to set up for Monday nights. Now, there's no trading day left to go tomorrow. I didn't even need to do the show tonight, but I missed you. I wanted to be here with you. We're going to go over some articles that are out, why I believe that what we're seeing right now is only going to get worse in the markets. So stick around. We don't have many people on right now. There we go. Buster Stacks. How you doing, brother? It's been a while. All right. All right. Let's get to it. Let's talk about our trades for the week. We had a very busy week. We're not day traders here. We are short-term swing traders, mostly of options. And we had an awesome week. Trader Isaac. Hello, Bob. Oxy chart getting tight. We'll take a look at it. I know Jeff wanted ALTO. He also wanted AVO. I don't know if Jeff is on. Larry had one. He posted it in the members area. That is lows. We'll get to that. We have Oxy for Trader Isaac. And we have Mr. Franklin on. I got your message. I love the behavior. You waited to the end of the trading day to identify whether or not we had a profitable trading week. Love it. Love the attitude. That's the discipline. Good stuff, Franklin. All right. Let's talk about the trades. So I had somebody sign up, I don't know, over the weekend, and they canceled. Maybe it was late last week, and they canceled. So I reached out to him. I said, why did you cancel? Out of curiosity. You weren't buying stocks. You weren't buying enough stocks. And, you know, if you're looking for a trading service that's going to give you, day trading tips, I'm not your guy. I am not your guy. If you're looking for a guy that's going to use strategy, knows when to avoid getting big in the market, and has a standoff approach, meaning using options to trading the market to stay market neutral, I'm your guy. Come over, check us out, 14-day free trial offer, TrendSpider for free, silver and gold level member. So, and I feel bad for the kid, and I think he's a kid, because all he wants to do is buy stocks. He doesn't want the education. And if you don't know the significance of what is going on right now in the bond market, if you are just simply a buyer of stocks, you are going to go broke. Don't go buying stocks right now. I mean, I put on a trade in AMAT yesterday. Why? Well, it looked okay on the chart. It looked good. It still looks good. It's holding support barely. But I had a call, a naked call position against that position. And we were kind of flirting with that resistance level, that strike price. I wanted to put on a little bit of protection. Didn't cover my entire position, but a little bit. So, folks, I'm going to go into the whys about this market, why technically it is a basket case, why in all probability, using the headlines, of why I think that we're probably going to go lower. So please think twice about getting big in this market. Today's lows could be tomorrow's highs. So be very, very careful. Think about that. Today's lows could be tomorrow's highs. What does that mean? You gap down, you melt away. It happens. I've been through it a lot, many, many times before. And what I've learned from being in those situations is it's best to avoid those situations. So you can't, the old Wall Street adage from the movie Wall Street. I think it goes like this: you can't piss in you can't piss in the tall grass with the big dogs without your capital reserves. Nothing could be nothing could be more true than that statement. I love that statement. It is all about your dry gunpowder. Profiting in this market is all about your liquidity. Are you liquid or are you over leveraged? If you're over leveraged, you got to get smaller. Think about it. And I'm going to go over the whys. And I would really ask people out there, because it helps everybody. Challenge me. Ask me challenging questions. Challenge what I'm saying on these charts. If I can't defend it, well, then people can form an opinion. Say, you know what? Maybe he doesn't know what he's talking about. And that's fine. So challenge me. Let's have a conversation. Let's have a good time. Let's say hello to people. We're starting to get people filter in now. I've been killing time here, pontificating. Paul, hello. Joseph Gardner, the man, loitering here again. Loitering here again tonight, Bob. You're worth the time. Stock tips or not. Hope you and your family. Same to you, Joseph. Thank you. Made me smile. Eric, top of the evening to you. Talon, I learned so much from you about that. You bet. Thank you for being here. Thank you for being here. Okay, let's get to it. So I just mentioned AMAT, and I have zero problem saying that we're down on our long position, which we opened up yesterday. Zero problem saying that. What we did do right, and notice how I gave you the bad news first, not the good news, and try to glimmer over it. The good news is that we opened up a very, very expensive strangle trade. We rolled it, I believe, once. Correct me if I'm wrong, Frank. I think it was just once on each side of the strangle. And we made some nice profits there. We are down on the common shares. We have yet to break support. You can see I have it outlined here. If we close down below the support level, we'll accept the loss, move to the sidelines. It'll be a small loss. So we didn't go jumping in. If I wanted to buy 1,000 shares, I didn't go buying 1,000 shares yesterday. I bought 250. It covered a portion of my naked call position, so that way I could sleep. I'm protected. I'm worried about my downside risk. I'm not worried about making a profit. If I'm worried about my downside and I'm using probabilities to identify good risk-reward entry trades, the profits will take care of themselves. It's as simple as that. Worry about your downside risk. So we book profits here. It's 100% profit on the options. So we did well here. Tesla, another trade where we rolled. I don't have them in front of me. We opened up a strangle trade. Net, we booked 100% profit on this one. I believe we rolled it once or twice. Call side once, put side once. BlackRock, earnings trade. We placed this trade the night before last in preparation for yesterday morning's earnings trade. 100% profit on this trade. Now, if you're long of BlackRock is in all probability going to head lower here. And I think this is a good one to begin talking about weekly charts, because the banks are not doing well. And for those of you that watch me, you know that normally I am a huge advocate of buying the banks when yields are rising. There's a caveat. The caveat is that if you have the S&P 500 rolling over, then the banks are probably going to roll over with the S&P 500. right? Because people need to get small. Margin calls go out, so people sell what's liquid. Banks are liquid, they sell them. So the banks are going to trade with the overall market. Now, BlackRock, these are old annotations. Don't pay attention to these. As a matter of fact, I got to get rid of them. This is from last quarter. Now, BlackRock is interesting in that we are at historical support. The problem is that we have let's do this first, a head and shoulders setup. And we're in a downtrend. The neckline is just below. This stock melted away all day long, And its price to earnings multiple, I was looking at him saying, Jesus Christ, is it expensive? Is that why they're dumping? And I mean, Goldman Sachs was flat on the day. The XLF was down about 1%, but this was down over 3% on the day. And I said, Jesus, what happened here? The earnings were not horrible. BlackRock is in a lot of trouble. If we close down below this lower band of support, and God forbid we break down below the March lows of 660 per share, it's going to go a lot lower. So we're going to avoid BlackRock. The options that we opened, we sold the options. We did not buy the options. We don't generally buy options unless we have an edge. If I cannot articulate my edge over another trader of as to why I am buying call or put options or both, I shouldn't be in the trade. I need to have an edge. Maybe it's an extreme oversold stock at historical support, an extreme overbought stock at historical resistance, whatever. So BlackRock in trouble. So we're out of this trade. I have no plans on trading it again next week. Goldman Sachs, another earnings trade. We opened this up last night, and you could see initially the shares rallied and then reversed. So where do we place our strikes? We were way up here. Call side around 360, put side around 290 per contract. On this trade here, I went out because I wanted to, our strategy this quarter is different from other quarters because I'm very, very nervous about this market. So normally I would trade the front week options. What does that mean? It means that I'll trade the weekly options that are expiring the immediate Friday, except for this week. Obviously, we have Good Friday, so they expired today. I decided I wanted to get further away from the price. I mean, I wanted to get far away just in case we had a binary event, meaning a unique event that drove the price up or down very, very hard. I was more worried about the put side because I'm worried about this market just rolling over and taking Goldman down with it. So we went out over a week into options expiring next Friday, and we booked 55% profit there. So we did very, very well. We'll take that. Now, those are the trades. I may have missed one or two, but these are the big ones of the week. And they were all profitable. We did well. I know a bunch of members did well too. AMAT, yeah. We roll the call side and the put side only one time, right? Thank you for that, Franklin. Eric, PTRA. For you, yeah. PTRA. Okay. You wouldn't want to have a lot of fiat money in the banks these days, given yeah. I'm telling you, that's folks. If you're not reading Buster Stack's comments, you really, really ought to. You wouldn't want to have a lot of fiat money in the banks these days, given the bank bail-in legislation they passed a few years ago. Folks, if you're not familiar with what a bail-in is, look up Cyprus circa 2018. What a bail-in is that rather than the government bailing out the banks, the depositor bails out the bank. They can take your money. They could take your money and use it to bail themselves out. They could steal your money by law. And if they're going to do it by law, you know they're going to do it. So please research the phrase bail-in. Are you exposed? Please check that out. Thank you, Buster Stacks, for that. That is valuable. Okay. Let's talk about the yield curve. Now, for whatever reason, I guess it's because we didn't close with an inverted yield curve. We traded intraday with an inverted yield curve. So a lot of people are saying that the yield curve hasn't inverted yet. You know what? In my book, the yield curve inverted. We inverted, and we have since rallied off of the lows of the month. This is a monthly chart, 2 years versus 10 years. And the reason why I'm being so conservative is that because normally I go by closing price action and opening price action. The reason why I'm using intra-period price action here is because it's better to be very, very conservative when you have a now steepening yield curve. Because I can always go back and say, yeah, we inverted on the yield curve. Here's that steepening. Let's go back to my other chart. Here's that steepening. And you better get very, very worried about the stock market in a steepening yield curve environment. Because you can go back all the way to 1990 or before. Once you get the steepening of the yield curve, stocks roll over. You saw it here in 1990. That was the S&L crisis. Here, the dot-com crisis. We all know what happened then. Financial crisis, bail-ins. That's next time around. They sold the market off very, very hard. And here we are yet again, history repeating itself. Thank you, the Federal Reserve. Thank you for doing such a bang-up job. All they had to do, and it would have been painful, yeah. All they had to do was let a few more banks and a bunch of other companies go bankrupt back in 2006, 2007, 2008, and we could have avoided this calamity, this nightmare that we are about to go through. The 10-year yield. Folks, Carter Worth posted a chart of the 10-year yield going back to 1965. This is a different chart, really. Let's try to get the same chart. Let's redo Carter's. It's a symbol, 10-year. Okay. Okay. So, am I using a logarithm? Let's take that off. No, it's still. I don't know why it's not completing the same chart that he had. But this is good enough. So this is a yearly chart of the 10-year yield, and you could see that we have been in a downtrend since 1980, 1981. That's when they killed inflation. Bond yields went lower. Granted, I want to say this. It is only April. We have many months left in the year. This is a yearly chart. But at the close of business today, the 10-year yield broke out above a downtrend channel, a downtrend line that has been in place for over 40 years. Think about it. Now, doesn't mean we're going to close there. But if you're a technician worth your salt out there, you're looking at this and you're saying, holy cow, what are we going to do next? What is the outcome here? You get small. You get very, very small. Here's our weekly chart. A very strong week. I remember typing this out. You are here. This is when we predicted that we were going to see a continuation breakout out of this inverted head and shoulders setup. For those folks out there that are new to trading stocks and you're saying, why does this guy talk about the bond market? I want to know the next hot stock. The next hot stock means zero, zip, nada. It means nothing. If this 10-year yield continues to rip up higher, you need to be very, very careful in this type of market environment. This is not healthy. You need to be looking to go the opposite way. You need to be looking to short this market. The TLT, 20-year bond ETF, just collapsing. Bonds are collapsing. We did hit a support level today. Look at the volume on the week. This is an abbreviated week, folks. Look at the volume. That's institutional distribution. That's not mom and pop selling 100 shares. Now, to be fair, and the same old's true with BlackRock, these stocks are very oversold. We're going to get a rip your face off rally in the next few weeks. It could be next week. It could be next month. I don't know. I'm not that smart. But it's going to happen. And I mentioned BlackRock. Let's go back to it. Let me illustrate what I'm talking about. And this was more on a daily time frame, not a weekly time frame. So that's important. You can see daily stocks are oversold, but they could stay oversold. And I think it's a 2-hour chart is like a coiled spring. That doesn't mean it can't go lower. It means that it could be an opportunity for a short-term swing trade soon, but not right now. I'm glad I'm out of this trade. I have no exposure any longer to BlackRock. In fact, we're going into next Monday with a huge pile of capital. So we don't have much on except for AMAT and a couple of other positions right now. Gold stocks did well today. Tips, really getting clubbed. Bond buyers, tip holders, they believe the Federal Reserve is going to fight inflation. They're not. They're not going to fight inflation. And I'm going to prove it to you in a moment. So the tip market is getting hammered like a baby seal. Daily chart. Very oversold here. We're going to get a rip your face off rally. This is not a horrible day. We may be bottoming out here on the 10-year. Excuse me, on the tips. The dollar. Weekly view. Very strong chart. The geopolitical risk trade is still on here. Money moving into the dollar. Europe is a train wreck. And we're probably going up higher. Volume, abbreviated week, above average. Daily chart, topping action, outside reversal bar. I'll be honest with you. When I did market wrap last night, I was bearish on the dollar because of the outside reversal bar. And I was rather surprised to see this morning that that the dollar had popped up higher. I was not surprised to see it sell off. That doesn't mean we can't consolidate and move up higher. So reluctant to say we have a top in on the US dollar. With the events going on over in Europe only getting worse, I'm going to go over that in a moment. Buckle up. It's probably going to get more dollar bullish in the short term anyway. Okay, so the VIX. The VIX is signaling it wants to go up. Remember back here in 2020 when we had a smash up? We've pulled back, and what are we doing? What have we done? Higher lows. Nice little cup. Really nice consolidation here. I think that we are moving up higher on the VIX. And that will not bode well for equities, in particular the S&P 500. Daily view. It's a perfect bullish candlestick today. If you're not familiar with what a bullish key reversal is, you're looking at one. If you want to watch a tutorial on my top 5 favorite candlestick patterns, it's free. 5-part video tutorial, link below. If you're watching this on YouTube or on the website. So bullish key reversal bar, we're probably going up higher here, lower on equities, bullish VIX, bearish equities. Transports, they're up on the week. And Stokes are going in the wrong direction. We were stopped at resistance. You know, I always like to say that the Dow transports are your canary in the coal mine for the rest of the stock market. But with the yield curve steepening now, bond yields breaking out above an upper band of resistance, I get concerned. So I'm not going to put as much weight as I normally would on the Dow transports being up on the week. Daily chart. This looks like a dead cat bounce to me. You know, we could pull back, put in a higher low, no doubt about it, and then rally from there. But this to me right now looks like a dead cat bounce. I think the transports are going to fail here and roll over. Do we break to new lower lows? I don't know, but it's not looking all that great. I would avoid. The Dow Jones Industrial Average weekly chart down on the week with the transports up. So it's not a horrible week on a closing basis. We did close off the lows of the week. We were up a good portion of the day today. I mean, did we close up? I don't think we did. We closed down on the Dow. Yeah, we closed down by 1/3%. So it melted away into the close. And this is a bearish reversal bar. This is not what you want to see. Volume was light. The S&P 500 weekly view. Rolling over another lower high for the Stokes. Stochastics are your momentum oscillator, one of my favorite, along with RSI. This is not good. This is very bad. And when you juxtapose money flow, Stokes, RSI, all putting in and validating the lower high on the S&P 500, you got to get your crayon out and say, okay, when does this market break? Here's your floor on the S&P 500, 409.37 on the spiders. There's your head and shoulders setup. So I'm going to pause here. And I always like to say this, is that the market sends you signals. You can either remain a permeable, which has been a very, very good strategy for the past several years. I'm not going to ignore that. But the market is sending you a signal right now. If you are a permeable, take a deep breath. If you're ticked that I'm talking bearishly and I'm saying that the party's over, we're going to take the punch bowl away. You got to go home. Leave your keys at the door, call an Uber, you're drunk, and take a step back and say, does anything he has to say have any validity whatsoever? If it does, watch further, because I'm going to repeat it. The market sends you signals. Now, the signal that the market is sending right now is that we had our blow off top. We are now putting in lower highs. We have already broken down to new lower lows in March, but we bounced. If we take out this low, if we take out and close below 409 on the S&P 500, this will be a stock market in free fall, absolute free fall. We have historic margin debt. That's got to come off. I'm going to show you an article in a while how Goldman Sachs is dumping shares. You're going to see that across the board. The days of companies coming in, borrowing cheap, and buying back their own stock, those days are gone. And a lot of the alpha, a lot of the lift that we got throughout this entire bull run has been by companies borrowing cheap to buy back their own stock to goose their earnings. I didn't make it up. It's the way it was. It's the way it was when I got here. So the market sends you signals. You can acknowledge it or you can ignore it. And just because I'm saying this right now doesn't mean it's going to happen. Doesn't mean we're going to break down and break to new lower lows. I'm just making an observation that, you know what? Buckle up. Get ready. Prepare for the worst. Hope for the best. Have liquidity on the sidelines, because I'll be the biggest bull going. If we happen to rally up and through 462 spot 07 and we close there, we're good. I'm expecting new all-time highs, but we're not there. Every indicator I'm looking at right here, right now is saying buckle the F up. And it's not just the stocks. Stocks are a symptom. They are an outcome. The weakness in the stock market is an outcome of a greater sickness. And that greater sickness, have no doubt, is the bond market. The bond market is vastly larger than the stock market. And once this gets going in the wrong direction, yields begin to spike up. You don't want to be in equities. You don't want to be in equities. All right. My doom and gloom is getting old. Qs, I'm very bearish on. We're going to look to short the Qs next week. I think we have our signal here that it's all clear. We have closed down the week below support. We closed out the week at the lows of the week. Stokes rolling over. RSI rolling over. Volume, abbreviated week, average. Daily view. Outside reversal bar. When I see a setup like this, I cringe. I really do cringe, because you had a day where let's say we had 3 days, right? Bearish day 1, bearish day 2, and then you would have expected a continuation move lower, but we didn't get it. We had a very bullish day yesterday, and then today, it was entirely negated. It may as well have never happened. And what we did here was create a new resistance level on the trip cues. And we are probably breaking to new lower lows here. I can't remember my trades this week. Franklin, didn't we do Microsoft this week? I got to go back. Yeah, we did Microsoft this week. Yep. That was profitable. I didn't go over Microsoft. What else did I forget? I think I said Tesla, Goldman, BlackRock. Yeah. All right. I forgot Microsoft. I knew I was forgetting something. Okay, cool. And those options expire worth. Yeah, I'm losing it, man. I'm losing it. You know what happens when you do all those rolls? Everything starts to blend together. The banks. So, normally I see rising yields. As long as I see the S&P 500 stable, buy the banks. I'm not saying that right now. Don't buy the banks right now. The S&P 500 is weakening up. The banks had a bad week this week. As a matter of fact, we closed at the lows of the week. Stokes are roll. We're in a downtrend channel here and down below 50. Daily chart. Bearish reversal bar on the day. On volume. Stokes are very oversold. We're setting up for a W formation here. So what we may get is a push down on Monday and then a reversal bar, maybe a turnaround Tuesday on Tuesday. The 50-day moving average is going to, absent an act of God, is going to cross down below the 200-day moving average on the XLF. Expect the talking heads on the financial news media to latch on to that. If it bleeds, it leads. XLK technology weekly chart, gap down, Stokes week. I mean, all these charts look the same. Head and shoulders set up, left shoulder, head, right shoulder, challenging necklines. Volume was light. That's one caveat there. Daily view. Very bearish day today. Semis, horrible week. Head and shoulders setup is officially followed through. We have now broken down. This is now in the books. Left shoulder, head, right shoulder, neckline broken. We have closed there. The semis are now officially a short. Look at the volume. This is not mom and pop selling 100 shares of the SMH. These are your big banks, folks, and they're not done. Outside reversal bar. I think we go lower. The only thing that's throwing me on most of these charts on the daily time frame, and I mentioned this with BlackRock as well, is that your Stokes are oversold. The thing about Stokes, people use them as, I always do this, overbought, oversold in air quotes. They don't appreciate the fact that they could stay oversold, or they could rally off the lows, hooking up, and then roll back over, creating a new lower low. So while it's bullish that the Stokes are oversold, you could get a dead cat bounce, then a rollover. So that's why I'm being very cautious here. I'm not going to discount the fact that I do believe that we are going to get some sort of a rally in the next several days. But I think we're going to get more pain first. Then we're going to get a relief rally. Then I think we roll back over. And the semis, they're done. With the 10-year yield ripping through resistance like it is right now, growth stocks are dead. Just look at the ARK fund, folks. How much is the ARK fund down on the year? 37, over 37.5% down on the year. Bearish key reversal week. This is stick a fork in it. This is done. Now the question is, if I'm saying it's done, when won't it be done? When is it time to buy? You got to see that 10-year yield come in. It's got to come in. If the 10-year yield continues to rally, these stocks are toast. They're toast. Meaning the stocks in this fund. Biotechs down on the week. LABU flirting with a stochastic breakout. Now look at how long ago. This is a perfect example of how Stokes can remain oversold. Stokes went negative way back here. Back in April, so back here actually, March of 2021, with an opening price of $100.67 per share. It's been over a year, and the Stokes have been floundering below the 50 mark, and here we are closing out the day at $14.14 per share. Now, I like LABU. I think a lot of the damage has been done here. We've been trading it. We didn't trade it this week, but we have been trading LABU, and we are building a position in it because I think that a lot of the damage has been done here. Does that mean it can't see the single digits? Of course it can. It's a leveraged ETF. If this whole market goes, everything's going to go down. But I think on that sell-off, that's going to be a buying opportunity for LABU. Energy. Weekly chart, bullish key reversal bar. Leadership group, but volume is drying up, folks. And I was looking at Doug. This is an inverse ETF earlier this week. And I was admiring these Stokes. They're like a coiled spring. But I'm glad I didn't execute on a trade. I waited until the end of the week to see how they would close. They did not close well. They closed down on big volume. They're probably going to break lower. But this is one of those inverse ETFs that if energy goes, we'll be looking to buy to get short of energy. Energy is really the last sector I want to short right now. There are other ones, the semis I would rather short. The Tues I'd rather short. Let's go to some comments. Bob, how can I protect my wife's retirement? No, not in bonds. Yeah, you know, you got to consult a financial advisor. I got to say that. I'm buying physical gold, but this is your wife's retirement account. So you need to talk to a financial advisor. Get somebody that's knowledgeable. If they can't answer what a bail-in is and how do you protect yourself from it, you're probably better off in bonds. Find a financial advisor that can direct you to the best avenue of where you should put your money if you see bank bail-ins. I would think that international value stocks are very attractive, but I would not want to have my money in a bank. I just wouldn't want to do it. Now they could just come in and take your money. Bail-in. So our brokerage account, I don't know. And believe me, I'm going to be researching that. I don't know. If somebody has an idea, I got to find the legislation. I will be looking at it. But that's why I'm a huge proponent of not buying physical gold. Excuse me, not buying electronic gold off the Comex. Own the physical. Own physical silver. Own physical gold. Consumer staples continue to lead the charge. This is the safety trade. People got to eat. People need to put energy in their cars, in their homes. That's why they're buying staples. What are they not buying? Consumer discretionaries down on the week. Not horrible, though. Got to say that. But I think these go lower. Look at the volume. Abbreviated week closed above average on volume. Bitcoin is going to go lower. I am dollar cost averaging in on Bitcoin every single week, small increments, nibble, nibble, nibble. But I think it goes lower. And I think that there's going to come a point in time where you have a dollar crisis, where the dollar is now viewed as not a safe haven. And that's when Bitcoin will begin to trade strong against the dollar as the CPI is lifting up higher. But right now, it's going to trade as a risk asset along with the rest of equity. So if you're looking at Bitcoin as a safe haven against volatility in the stock market, that's stinking thinking. That's not the way it's going to play out. Right now, if you do a correlation of Bitcoin relative to the triple Qs, they trade in tandem. They're going to go lower together before Bitcoin emerges out of the ashes and moves up higher. I think that's only going to happen when the 10-year yield perhaps comes in, but definitely when the dollar begins to roll over, you get panic. People move out of the dollar into Bitcoin, into gold, then they move up higher. This is where it's rare, very, very rare that I don't agree with Peter Schiff. This is one of those instances. He doesn't like Bitcoin. I have hope for Bitcoin. He views it as a Ponzi scheme. Maybe he's right. I would never say the guy is wrong. But when I see big institutions investing in Bitcoin, I want to be a part of that. So if they're putting their necks out, okay, I'll trade along with them. Otherwise, I have no idea what the heck a Bitcoin is. Emerging markets going down. They're going to go down with risk assets right now. But I think that this is where money, look at the volume on the week, very, very light. This is where the money is going to go. You're going to have a sell-off across the board. Domestic stocks in particular because they're so expensive. We go over PE ratios and the Buffett indicator every Sunday night. So we know they're expensive. We know that we have a huge divergence between bond prices and stocks. That needs to get fixed. Bonds are going down right now. So should stocks because yields are going up higher. But as we get the sell-off, the climax sell-off, I think that domestic stocks, while they may bottom, you're going to see money move into value international stocks and emerging market growth stocks. Gold. We broke out this week, folks. We have been talking about gold for years now, and it's still not too late. It's still not too late. What can I say? It's clear. This is where the money is flowing into precious metals, into industrial metals, uranium. We bought uranium a couple of weeks ago. We're doing very well with it. Let's go to a daily chart. As a matter of fact, what did uranium do today? I didn't even check it. I hope it was, it was up on the week, 2%. What did it do on the day? It reversed. But we did break out on a daily time frame. We had an inverted head and shoulders setup. I'm liking uranium. I think it's going up higher. Back to gold. So weekly chart, we have a breakout on gold. Daily chart, down day today, but we reversed to close off the lows of the day. I will say this. We did not close above support. We gave that up. I think we're going to pull back a little bit further here on gold. Stokes are a little bit overbought. That they need to come in. So on that pullback, I'd be a buyer of gold. Nugget, we own it. This is a leveraged ETF putting you long of the senior miners. Bullish. It's going up higher. With the rest of the market down today, Gold mining stocks were up. GDXJ weekly chart. We own it. These are your junior miners. Junior miners are starting to outperform the seniors. It broke out this week. Indicators very strong. Volume light, but an abbreviated week. Daily chart. We're extended here. I would not go chasing the miners. We may get a pullback in the next few days. If you get a pullback to the support level around $49 per share, boom, I'd be all over it. Silver. Silver's getting ready for liftoff. I mean, I love this chart. Here, let's do this. Here is your bull flag, your continuation pattern. We broke out this week. It's going up higher. Let's memorialize this observation here as well. Stokes, another higher high. Excuse me, another higher low. RSI, another higher low. Members, do I need to do the week ahead commentary? I just did the entire week. The markets aren't open tomorrow. Daily chart. Silver was down, but closed well off the lows of the session. We're going up higher here. The silver miners, of which we're long of. These are our positions, folks. Broke out on the week. So a year ago, more than that now, we put together an inflation portfolio. That portfolio of long equities is vastly outperforming the S&P 500 right now. Our options portfolio is head and shoulders above the S&P 500 on the year thus far. So we're doing something right here. I don't want to get to the point of being hubris. What? Lacking hubris? I want to have humility. So we will be watching for signs of a top. We saw one of our trades a few days ago get overbought, and we're not buying our own BS here. We booked profits. We'll go to that in a moment. I'll talk about it. Silver miners broke out, looking very good. They're going up higher. The stock I'm referencing is Calamity Foods. Now, Calamity, we own this since back here. Calamity Foods, our strategy as it hit RSI about 85 at the time was just to put in a 3% trailing stop loss order so that we would get taken out as close to the highs as possible. We did that, and we were stopped out. I think it was 57.18. I think that's the price. Definitely 57 or higher, but in that range. We bought back in yesterday, closed up today, and we're going to be looking to add more here because egg prices are surging due to bird flu, the new fear, bird flu. We have already begun accumulation of international stocks. Indonesia, the second fastest growing economy in the world. Let's go to, what time is it? We have 7 minutes. God, I talked a lot tonight. All right. Hey, Gay. All right. Gotcha. All right. Let's do some chart requests. I'm running low on time here. Really quick. I want people to pay attention to this, okay? I'm not going to get into the story. All you're going to need to know about is Hunter Biden. The midterm elections are coming up, and they are going to set this world on fire to avoid the annihilation that they currently face, the Democrats currently face at the polling booths. So to avoid any more damage done by this guy, they are going to set the world on fire. Have you noticed COVID back in the headlines? They brought that gremlin Fauci back out of retirement. He's on the front pages of the newspapers again, back on the Sunday talk shows. So I don't know what the next big fear porn is going to be, but it's going to be a big one. And it's probably going to be a bunch of them. So they're going to do everything possible to cover this up. They do not want you knowing this. They do not want normies knowing about this sickness, the corruption that is going on with this effing guy and this, as the Salty Army would say, this potato in the White House. The pimps of war. You could see the game plan here. They are ratcheting up tensions over in Europe. You want to know why the dollar is so strong? Who the heck wants to be in the euro? You worried about a nuke going off? It could quite possibly happen. Because why? They want to have Finland and Sweden now join NATO. Where are Finland and Sweden? Right on Russia's border. What would you do if you were them? I mentioned this earlier. Goldman quietly selling billions in stock. Third quarter in a row. They're unwinding, folks. UMich sentiment survey. Biggest spike in hope in 16 years. Could be another reason why we saw the dollar move up higher along with yields today. Retail sales. This didn't help equities at all. Slowest in 13 months as online spending plunge. Let's bring up Amazon. How did they do today? It's barely holding support here. I think I mentioned this a few weeks ago that I expected a rally back in an effort to try to recapture support. The question was, were we able to break out? We were not. We were rejected. Amazon's not looking good. Not looking good at all. Amazon's a short. Oddly enough, we shorted Amazon right into that COVID sell-off. We were long of put options. All right, let's do some requests here. Folks, we're using TrendSpider, 35% discount code below. Automated technical analysis. If you're not using it, trust me, you are trading with one hand tied behind your back because your neighbor to the right and to the left, they're using it. These guys are growing leaps and bounds. ALTO, first chart up. Weekly view, I like the setup. I got to say, I've been bearish all night long here. I like this setup. We got overbought a few weeks ago relative to the third standard deviation Bollinger Band. What do we do now? We pull back. And we broke out on the week. We're going up. This is Jeff's stock. Bullish, Jeff. We're going to watch that one. Daily view. All right. So here's the value. I've never looked at the stock before. And with the click of a button, with the automated trend lines, I know why we reversed off the highs of the day today. We hit resistance. So what do I want to do? I want to know when we break out above resistance, because that's the only time I want to buy this stock. When else might I want to buy this stock? Well, we reversed today. So that means that we could touch this lower band of support. and we're good to go. So it's a rules-based approach. I'm not going to buy it right here, right now. I could do it in the after hours. I like the weekly chart, but I would want to nibble down here on a retest, opening position, then add more on a breakout above resistance, because that's the market validating that we're right and that the shares are moving up higher. But another thing I want to do is I also simultaneously, I want to create an alert up here at this red line. Why do I want to do that? If I'm going to swing trade it, I want to know where there's resistance and where I should get out. And we'll keep this active for a while because it can hit it multiple times. We could scale out. We don't have to sell all at once. But if you hit it, pull back, rally again, hit it again, that alert will keep firing off. So we're good to go here. Set it and forget it. Rules-based approach. Next chart up. AVO. Jeff is on fire today, man. Another good one. Mission Produce. Ooh, food. Love it. Think it's going up. Closed up on the week. Relative strength versus the S&P 500 and NASDAQ. We have here, automated trend lines, weekly. Bam. Look at where we reversed off of. So we sold off, held, rallied back. There's your rising wedge formation. We'll be looking for a rally and a close above this resistance level, weekly time frame. And we're good to go. Daily chart. Jeff, if you get a chance, check the short interest on this one, because I'd be interested in it. Here's our alert here. We're set. It looks as though we're going to be breaking out here very, very soon. RSI validating the move up higher in price. Very nice. Bullish on AVO and ALTO. Jeff, rock solid choices. LOW, lows. Again, automated trend lines. Look at what happened here, right? We reversed last week. This week, bearish reversal bar. So the question now becomes, do we hold? Do we hold this support level or do we break? So right now, it's a matter of, you got to take a step back, wait. We don't want to hope and we should fear. Let's take a quick peek at the monthly chart. We're holding VWAPs and moving averages here. 21 period moving average. What else do we have here? I think this is the VWAP up here. Yeah, we're down below the VWAP. I would strongly urge you to wait and see how we close out next week. You know, back to that weekly chart. Do we hold this support level? If it fails, you'll be happy you listen to my advice. If it tests it and it reverses and it flashes a bullish key reversal bar similar to the prior week, that's a buy. That's a good thing. Daily chart. Very bearish day today. I think we're going lower. I would avoid this. And it quite possibly could be, you break down below the lows of April the 6th, it becomes a short. So be very careful here to the long side. Thank you, Franklin. Thanks for always being here, my friend. You're a gentleman. Seaboard, thanks for joining in, pal. I know I went long tonight. My apologies. Yes, hit the like button. Thank you, Franklin. Hit the like button. Okay. Oxy. This is for Trader Isaac. You are accurate. Very tight wedge formation. Down weak. That's okay. We're consolidating gains here. I think you got to wait for the breakout here. Again, automated trend lines. There you go. Wait for the breakout. You know, if you wanted to nibble now, I'd have no problem with scratching the itch. Just stay very, very small, then buy more on the breakout. But I think Oxy is going up higher. PTRA. Okay, so the first glimpse of the daily chart. This is why I always like to begin with the weekly charts or a monthly chart to know where the stock has been, to identify where it may be going. So the daily chart gave me a bad feel, but then when I took a weekly chart, it puts things into context. So we're consolidating again, automated trend lines, folks. If you're not using TrendSpider, it's such a time saver. 35% discount code below. Click of a button. You're in a trading range here. Technically, you're still in a downtrend channel, but what we're doing that's different this time from prior periods is that now, when we're pulling back, we're not retesting the lower band of support any longer. We did that here. Now what we're doing is that we're putting in a higher low. That's a game changer. I'm not saying go jumping in with both feet here. I'm saying pay attention. The market is sending you signals. So this could be nibbled upon and then add more on a breakout above resistance at around 790 per share. Closing time frame only, not intraday. Closing time frame. It appears poised 7:59 Eastern Standard Time to close above 790 per share. Pull the trigger. SWM. Switcher. Oh man, you got me on this one. Schweitzer Mandut International. Avoid it. We've broken weekly support. We've broken monthly support. Head and shoulders set up. This is a short. You get a new weekly lower low. This is a short. Any close down below $24.25. It's a short. Oh, SWN. Oh, it's still a short. SWN. Horses left the stable here. I love the chart. I think it's gorgeous, but the time to buy it was right here. So now it's a momentum trade. You know, it's probably going up higher. We had decent volume this week, but volume is declining. So I like it. It's probably going up higher. For me, it's a little bit too long in the tooth. And keep in mind now, again, folks, I hate to keep repeating this. If you didn't have TrendSpider, you probably would have figured this out eventually, but not automatically. Resistance above. Beware. Far too much risk, not enough reward to get involved with this stock. I think the money's been made in the short term. It needs a correction, and then I would revisit it. But good looking stock, but I think it's had its run, and you're nearing resistance, and you see what happens each time we come in the vicinity of that resistance level. Even back here, we sell off. Did we do PTRA? No, we did not. We did this one. TSM. Taiwan Semi. I would love to have traded the earnings. They don't pay on premium. So I avoid. I didn't even price them out this week. I don't like it. It's going lower. We had a failed breakout. This is a daily chart. Let's pull back to a weekly chart first. Stay consistent. We closed up on the week, but we closed well off the highs of the week. We're flirting with a new breakdown below the March lows. I would avoid this. Big bearish reversal bar today. We had a bit of a dead cat bounce. That bounce is now over. I would avoid Taiwan Semiconductor. I think it goes lower. Folks, I'm long in the tooth here. I wish I could take all the requests. I can't do it. Everybody have a great night, and I will talk to you tomorrow. Be well. If you're a member, I'd stay on all night long. So join up. 14-day free trial offer. Talk to you soon, folks. Be well.